Hey guys, what's up? Alec back with the daily stock market, and look at that. Nothing but green today in the stock market. Snapchat up 15%, Coinbase up 12%, Neo up 12%, and the list goes on and on. However, it was a big earnings day today, so if we look at a stock like Google, they're down 6%. Microsoft is down 2.5%. And we also had Enphase Energy, Chipotle, and Visa report earnings today too. So in this video, we're going to dive a little bit deeper and see what's going on. Make sure you like and subscribe, and let's jump right into this video. So the first one that we have up is Google, down 5.8%. So let's dive a little bit deeper and see what's going on with Google. If they missed huge, if they're deserved to be down 5.9%. We're also going to talk about if Google stock is a little bit more attractive now for a long term. Okay, so here we have Google's numbers pulled up. Here we see Google misses on expectations as YouTube ad revenues come up short. Revenue was 57.27 versus 58 billion expected, which is a huge difference. And EPS came at $1.06 versus $1.25 as expected. Shares of Alphabet were down 6% following this announcement. The digital advertising market has been struck by a slowdown in spending in the past few quarters as companies pull back their budgets, admin, raising inflation and interest rates. Social media companies have been especially hammered by the cuts, with Snapchat reporting a net loss of 360 million and revenue growth of just 6%, its lowest yet. Meta's Facebook has run into similar headwinds, with the company reporting its first year-over-year decline in revenue in Q2. That company, Meta, is set to report Q3 earnings on October 26th, so watch out for that. But Snapchat and Meta or Facebook are also dealing with aftershocks of Apple's iOS privacy changes, which limit their ability to collect all user data across the web that they then use to sell advertisements. Alphabet, however, is still able to collect plenty of users' data via its search app and its YouTube big platform as well, providing advertisers with a safe haven from Apple's privacy changes. Google still isn't immune to the impact of the economic slowdown, according to Bloomberg. Yes, we did have a big miss from Google, but I'm looking at this as a buying opportunity. I'm probably going to buy a few shares on the dip, but in my opinion, I think Google can go even lower. Okay, to even a 52-week low of around $95 per share. And I think it could even go lower than that, even to around $85 per share is where I'm going to seriously start considering buying Google. Now let's talk about Microsoft, down 6.75% after hours, which is a shock because they actually provided a beat on earnings, on EPS, on revenue, and growth as well. Okay, but if we pull out to the last month, they're down 10% still, and the last year they're down 24%. So are they a buying opportunity? Can they go under $200 per share? And in my opinion, I think they can drop another 15%, 20% or so and go under $200 per share. Closer to $195 is where I have my main price targets to buy Microsoft at. Now, we did see Microsoft beat expectations in all 5 categories despite slowdown in cloud growth. Here we can see Microsoft reported its fiscal Q1 earnings after the closing bell on Tuesday, beating analyst expectations on the top line and the bottom line, despite cloud spending growth falling year over year. Here are some of the most important numbers from the report compared to what analysts were expecting from the company. Revenue was a beat for Microsoft, $50.1 billion versus $49.6 that was expected. So almost a $500 million beat on revenue. EPS came at $2.35 versus $2.29, which was expected. Productivity and business processes, $16.5 billion versus $16.1 billion, which was expected. Intelligent cloud, $20.3 billion versus $20.3 billion expected, so they did meet on that one. More personal computing, $13.33 billion versus $13.1 billion expected. So needless to say, Microsoft is definitely one I'm keeping an eye on after a big crash like that, 6.7% down after hours just from reporting earnings, and especially because they reported a beat on earnings. Okay, in the last year, we have a 52-week low of $225 per share. Remember, I think it'll go below that, and I think we will see $215, $200, and $195 per share once again. And Visa had an earnings beat also, not much movement after hours, only up 0.9% as we can see to around $196 per share, up 5% in the last week. And if we pull out to the last 3 months, we can see there was an 8% downward movement, and in the last year they're down 15%. Visa is a stock that I do like for long term. However, I think I want to see them below $175 per share before I start seriously buying them, and closer to $160 per share. I don't think they will hit like a 5-year low like we see some other stocks in the stock market of around $115 or $125 per share. I think Visa is a stock that can outperform the S&P 500 over the next 5 years. It's also betting on America. Visa, whenever we look at Visa's earnings, we're looking at purchasing power and debt that people have, that Americans have. So in my opinion, I do want to be betting on America over the next couple years. So that's why Visa is in my portfolio. They also have a larger market cap than Amex or MasterCard, by the way, at a $402 billion market cap, a 28 PE ratio. So I do want to see that PE ratio closer to 20. And they are a dividend stock with a 0.79 yield on that dividend stock. Okay, we can see this article here. Visa beats on earnings and raises its dividend by 20%. Outlook for the new fiscal year doesn't break in recession scenario, but CFO says company will stay vigilant. Okay, so a lot of people are talking about a huge depression coming, a huge recession coming, but the earnings that we saw today, that we just went over in this video, aren't showing recession, territory or recession scenario. Okay, Visa beat earnings, Microsoft beat earnings, Google missed by just a little bit. So that's why a lot of people were watching Visa earnings also, is to see if we were in a quote-unquote recession. Visa topped earnings expectation for its latest quarter Tuesday as the payment giant continues to call out strong consumer spending trends, which is a green flag and not a red flag for a recession, that is. Payment volume at Visa grew 10% in the fiscal fourth quarter. Processed transactions increased 12%. Visa's revenue rose 7.79 billion from 6.5 billion and came in ahead of the consensus, which was only 7.5 billion. Okay, if you look at just our numbers and didn't look at what people are writing and saying in the media, you wouldn't think that all this anxiety or uncertainty out there, and that people aren't feeling good about things, and people are talking about a recession and stuff like that. If you look at the numbers, they don't reflect that. And that's coming from the horse's mouth, the CFO at Visa. The numbers have been steady for 9 months, and spending is stable almost everywhere in the world, and it's quite strong even. Though its results, Visa has seen no evidence of consumers feeling a pinch, consumers feeling anxious, he also added. So this week of earnings wasn't nearly as bad as people were predicting or projecting. And remember to do all your own research. Also remember, playing earnings on options is a very risky way to trade. And for example, a stock like Microsoft, even though they beat earnings and they beat revenue and they beat cloud revenue, they're still down. Their stock price is still down even on an earnings beat. There's always risks involved in the stock market. And remember that. A good way to play earnings is defensively. So, for example, we see Google drop 7%. We see Microsoft drop 7%. That could be a good time to buy some shares for long term, or dollar cost average a little bit heavier into some of those stocks that fell off big. Thank you guys for all the love and support that you continue to show on the video. Subscribe on YouTube where the full length videos are posted. And if you're already subscribed, make sure you ring that notification bell so you're alerted first when the new videos are put out. Share this video with a friend if you think that they can find some value in it. Comment below what you guys want to see in the next video. Thank you guys again for all that love and support. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.